So in this video, we are going to go over the setups, okay? These are the setups that I use every single day. Now, these setups are very good if you want to grow a small account, because number one, it's going to help you develop patience, because like I said before, these setups don't come often, okay? But these setups are very high quality setups. So when you get these setups, minimum you're looking for a 2-to-1, okay? So that is very good. Now, since these setups don't come often, you have to understand you probably get maybe 1 or 2 trades a day, okay? That might not seem a lot, but think about this for a second. If your minimum target is 2-to-1, okay, that's like you taking 2 trades, right? Some trades you can actually get 3-to-1, 4-to-1, or sometimes even a 10-to-1, okay? So I want you guys to think about not the amount of trades that you take, but the risk to reward you can actually get. So if you get a 3-to-1, which is very doable, I do it all the time, 3-to-1, 4-to-1, that's like actually taking 3 trades or taking 4 trades. So don't basically get, addicted to the amount of trades you take, okay? Because these trades will allow you to basically maximize your, reward, because there's a lot of power behind these trades, okay? We're going to talk about these smart money setups, these manipulation setups, okay? And these setups will help you become a better trader and wait for the market to set up, right, the right way. I think a lot of people force trades, and you don't need to, okay? I believe this will help you just sit back, relax, and take your trades. Now, I trade the markets from 9:30 a.m. all the way to 1:30 p.m. Eastern time, okay? So that time frame is good enough to get your setup, okay? Some days you would get maybe 2 to 3 setups, okay? But for the most part, you're looking for at least 1 or 2 setups between that time, and looking for a nice reward. So let's go over the setups, and let's explain the setups real quick. Now, overall, we do have 7 setups that we are looking for when we are trading these markets, okay? I do have a bonus one, which is, so the total is going to be like around 8, but for the most part, it's going to be 7 setups that you're looking at, okay? I'm always looking at these 2 candles, the main 2 candles that we talked about in part 1. These candles right here, okay? I'm looking for a nice solid bar, okay, and a nice tail bar, okay? Now this tail bar can actually be a green one, okay? This is a bullish one right here. But that, the candle body can actually be green, or it can be red, as long as we have a nice tail right here, okay? And vice versa, if you're looking for, the market to go down, we're looking for a solid red candle or a nice tail candle to the downside, okay? Now let's go to the first setup, guys. Now, the first setup is basically a smart money stop out, okay? So smart money loves to manipulate, right? And it happens every single day. It loves to manipulate the market and basically, stop people out, okay? Now, we're looking for smart money to stop someone out at a key location, okay? So right now, if you look at this, we are at the demand zone right here. Notice how the market came back down to that demand zone, okay? Formed a nice little tail bar right here. Someone went long right here. They got stopped out. But look at the next bar, okay? The next bar, nice little long tail. A lot of times you will notice smart money come in, because usually you see this bar. You notice how this bar is much bigger than these 2 bars right here. That's another way you can actually tell smart money is in the building, because the size of this candle is just, way bigger than these other. That means that they are moving the market, right? But anyway, okay? So we're waiting for someone to get stopped out. Now the next candle, we're waiting for, either a tail candle or a nice little solid candle, okay? Solid bar, okay, for the most part. Or, even if it's an engulf bar, okay? We're looking for a reason to get in, okay? It has to be a setup bar. And we're looking for the market to basically, go our way, okay? So notice how We also had a nice inverse head and shoulder, so this was a nice setup right here. We have the head right here, left shoulder, right at demand. You know, nice little stop right here. Someone got stopped out, followed by a nice little tail bar. We're looking for that profit, okay? So that's the first setup, guys. We are looking for someone to get stopped out at a key location. When I say a key location, I'm talking about anywhere on the chart where, you know, we're looking to, you know, basically take a trade at. So we're looking to take the trades at these demand zones, supply zones, a swing high, swing low, okay? Anywhere we're looking to take a trade, that's where we want to look for someone to get stopped out, okay? So that's the first setup. Now, before we can get to the second setup, guys, you have to understand, when someone gets stopped out, you really want the bar, as soon as they get stopped out, you don't want your next setup bar, okay, to be far away. So let me show you guys a good example. Okay, so notice how this guy got stopped out, right? Now, you don't want this bar to be far away, like around here, okay? So if this person got stopped out and the market kept going down, okay, kept going down, and basically we can, you know, put these at red. So if the market kept going down, okay, down, and then it shows you a nice little bullish bar or candle, whatever, we don't want to take that. It's best to basically let the market stop that person out, and immediately we see a nice little reverse candle, okay, to the upside. That's the best setups, alright, so let's go to the second setup. Okay, so let's go to the second one, which is, the second setup is when the market can't close above or below the high, okay? So notice how we was going up. We are at supply right here, okay? We have supply right here, okay? Now we went up, okay? The market pulled back and it went up again. We made new highs, but notice how we can't close above this high right here, okay? That's a signal to go short. Usually when I see that, I don't care what bar is basically showing, okay? I'm going short the next available bar underneath. So this could show me any type of bar. It doesn't even have to be a setup bar. If I see the market can't close above this, I'm going short the next available bar, which is right here. Actually, it's probably this bar right here. But it did show us some nice setup bars, which was nice tail bars, okay? Pin bars, whatever you want to call it. But I don't care what bar it shows me. If I see that it can't close above here at around a key level, which is the supply zone, I'm going short, okay? Another example right here, the market shot up. You see we had a nice demand zone, so the market shot up and it pulled back to this demand zone right here, all right? Notice how we popped up, right? It came back and we couldn't close below. You notice how we couldn't close below here, okay? I will go long right here, the next available bar to the upside, right? But also, what else do you notice right here? You notice someone getting stopped out at this key level, okay? So this is another great, you know, long, okay? So this person went long, he got stopped out, boom, you want to take this one, okay? And this is what I'm doing all day. Now this is considered a can't close. I'm going to show you why. Now we have a nice little supply area right here, right? And what I want to show you guys is the market went up, it pulled back, right? This candle right here is a pullback candle. This next candle, we tried to make a new high. We did, okay? But it couldn't close above this candle right here, okay? The reason why this is considered a can't close because this is a pullback, okay? And then when we pulled back, we actually tried to make a new high. We did, but we couldn't close above this candle right here, okay? And you can actually use that as a setup too. And this goes for, you know, a bullish setup too, okay? When you see the market can't close above this nice pullback candle, it tried to close below here because we tried to make a new high, remember? Try to make a new high right at that supply zone, okay? It couldn't close. That is telling me that smart money is in the market. It's faking people out, and basically most likely is going to continue to go back down, right? Okay, so that's one version of, you know, can't close below or high. Let me show you the second version. All right, the second version is basically when the market is trending, okay? and it's basically going underneath these swing lows. So you see how we are making higher highs right here and higher lows, right? Notice how we made a higher high, it came back underneath this swing low right here, and as soon as it broke the swing low, guess what? It couldn't close below that swing low. Okay, smart money is stopping these guys out, but it can't close below the swing low, and it shoots up. I want to get in right here. All right, so we want to capitalize on the swing lows, right? The swing lows right here on a trending market, and the other version is basically when it can't make a higher high or a lower low at a key level like supply and demand. Alright, so let's go to the next setup, the third setup. Okay, so let's go to the third setup. The third setup, guys, is a smart money retest. Now, this retest, guys, has to literally like come very, very close to the high. Okay, so we are looking for a price to go to a key location. We have nice supply right here. Okay, notice how it's going to this supply right here. Nice reaction. We don't want to be the first guy that's short, but we're waiting for the market to come back either to stop this guy out. Okay, now notice how it came back and it almost stopped the guy out. Okay, but it didn't. The key is, guys, we want this bar right here to come very, very close. And if it start to turn back down, okay, we want to go short the next available bar, right? Now, we don't want something like this. Let me show you. Now, let's say, for example, this is the area you're looking at. Notice how we went down. We was going down. Now, imagine we had a pullback, okay? And then it finally curled back down and continued to go down, right? We don't want this setup right here. We want price to actually go up. We want price to look like it's about to break the high, okay? We want it to come very, very close to this high, okay? And if it fails right there, we want to take that next available short, okay? That's a smart money retest, because smart money is basically stopping people out, because believe it or not, a lot of people don't even put their stop loss, you know, below these candles. Some people, they cheat. They try to, you know, basically put their stop loss before the candle, okay, before the high. So let's say that, all right, let's say that you went short right here, okay? Let's say you went short right here. Believe it or not, some people don't even put their stop loss above this. Some people put it either halfway through, okay, or a little bit, you know, above halfway. So smart money will come back up, take those stops, okay, or come back up to scare you a little bit so you can get out of your position and go right back down, right? So we are basically working with smart money, understanding their language and taking advantage of that, right? So that's the third setup. So let's go to the fourth setup. Okay, so the fourth setup is a fake out or a fake breakout, okay, and it comes back to stop people out, right, and it goes straight back up, okay? We actually talked about this part one, okay, but we're gonna basically, you know, go a little bit deeper. So we want the market to do a nice little breakout, a fake breakout, okay? We do have consolidation here, but a lot of times we don't even need consolidation, okay? But we do have consolidation here. So notice how it broke out of this consolidation, a fake breakout, and it snapped back. So with this, we really want that snap back, because it's very, I think it's very important. Now, if you don't get the snap back right away, it's okay, but it is very good to get that snap back. And when I mean snap back, notice how as soon as we broke the high, it snapped right back. That's how you know they are trapping traders, okay? Because as soon as it broke this, right, it's snapping right back, because they don't want to waste no time, okay? Snap right back, stop everybody out, okay? Confuse people, make people think, oh man, this thing is going to go down now, and it goes right back up, okay? Now, with this is right here. This is more a limit trade. I love these trades right here, okay? When I see this trade, I'm loving this trade, because you can actually get a nice risk reward out of these trades. But for the most part, you're looking for price to come back to a demand zone, and you want to go with a limit, okay? Now, the best way to do this is when the market is breaking out, okay? You want to catch that first pullback, okay? That's the best way when it comes to a limit. You want to catch that first pullback, okay? For the most part. Now, notice how we broke out. This is the first pullback right here. We want to get in with a limit. Now, you can actually get in without a limit, okay? Like, example, you have the market going in this right here. You get in probably one of these bars right here. But this setup, in my opinion, is best to get in with a limit order, okay? And, let this baby ride up. So let me show you guys another example real quick. Okay, here's another example. We have consolidation right here. It broke out of this consolidation and it slammed right back up. Notice how as soon as we broke out to the high, it slammed right back. Okay, that is smart money right here. Slamming right back, stopping people out. Okay, and shooting right back up. Now notice how it stopped this person out right here, right at this demand zone. Okay, I will put a limit. Okay, order right here. And if you don't know what limit order, basically it's just a pending order, waiting for a price to get to that level. As soon as it gets to that level, you will get filled. Okay, well basically your stop will be underneath here. Okay, underneath the lows. Underneath the low, you put that pending order right here, and you're looking for a nice risk to reward. Okay, now let's go to another example. Okay, this is the market going down. We broke out. This is the first pullback. Remember, these limit orders, you pretty much want to go in the first pullback when it breaks out. Okay, the last one was a pullback right here. This is the first. This is a breakout right here. The first pullback. For the most part, you want to do the first pullback, because if you don't do the first pullback, a lot of times it's just it's probably going to blow past that level. Anyway, so we broke out. This is the first pullback. Okay, notice how. Now, this wasn't consolidation. That's why I said sometimes you don't need consolidation. Notice how we went down, we pulled back. So this was a fake breakout right here. It went to the high. It went below this candles right here, these candles right here. Snapped back, stopped this person out right at this zone right here. I would actually get in with a limit. Okay, but notice how it couldn't close above this tail bar. So this was a perfect trade. Okay, you could have got in with a limit. Okay, but let's say that somehow you didn't get in with a limit. You definitely could have got in right here because it couldn't close above this, and you look for your profits. Okay, so that's the fourth setup. Now let's go to the fifth setup, guys. Okay, so the next setup, guys, is a smart money breakout. Okay, now smart money breakout is basically we're looking for some type of manipulation. Okay, so what we have here, guys, is the market consolidating right here. You can tell. Okay, market consolidating. Okay. But I want you guys to notice how this bar right here, let me erase this. Actually, let's go here. You notice how this bar, okay, almost came to the low, okay? This bar almost came to this low right here to stop this person out. So when I see something like this, okay, this is a nice little breakout. And plus, I want the consolidation to be tight. You notice how this is tight? It's not wide like this. See how this is wide right here? This is a big breakout, okay? We want it to be small and tight, okay? Now, notice how this came very close to the low. As soon as I see something like that, I would take this breakout, okay? That's a smart money breakout. Now, another thing is, this could be something like, the market could do something like this. It could, consolidate, okay? This bar right here could stop this bar out, all right? And then shoot right back up. That's another form of a smart money breakout. But you want it to be a nice tight consolidation. Either come very close to a low and shoot right back up, or stop someone out real quick and shoot right back up, alright? So that is the fifth setup, a smart money breakout. Let's go to the sixth setup. So the sixth setup is a solid bar followed by another solid bar, right? And we want the solid bar, you want this situation to either stop somebody out, okay? So notice how we came into supply and actually took this trade. We came into supply, okay? Notice how this person went long. We stopped this person out right here, and he couldn't close above here. I was going to take a short right here, but it never basically went below any of these candles right here. Now, notice how it went above this candle, okay? And this bar right here wiped out this green bar. Nice solid bar getting wiped out, and usually you want these bars to look the same, okay? They're pretty much the same size, the same height. Came back, wiped this bar out. I'm in the market, and I actually got a nice little a 2-to-1 out of that trade, right? Close to 3-to-1, but nice little 2-to-1. So that is the 6 setup. We want this bar to stop somebody out. So basically, what I'm trying to say is, if it comes back, let's say it comes to the supply level, and we see one of these setups right away, we don't want to take that. We want smart money to stop somebody out. Then we see one of these setups, boom, we get in the market. All right. So that's number 6. Let's go to number 7. Okay, so the 7th setup is a engulf trap and a regular engulf. We talked about this part 1. So we have an engulf trap right here. Notice how and these, these setups, I love when it has a nice tail to it, because you can tell that the market was red right here and shot back up. Okay, we are at supply right here. So let me show you guys that basically on a drawing board. Okay, so we are at supply right here, guys. Okay, came back to supply, gave us a nice little engulf trap right here. You go short the next available bar, okay, and basically you look for your risk reward, right? Let me show you guys another example. Here's another bullish engulf trap. I like this one too. You see a nice tail right here. I like the ones that has a nice tail. Nice tail, because you can tell that this was a bullish bar. It was going up, and it basically went up, boom, stopped this person out. Okay, we had a nice little a demand area right here, because we had a nice smart money push, right? Smart money came back to the next available level, which is right here, okay, and basically shot up. All right, I actually took this trade right here. Okay, nice little engulf trap. That is smart money stopping someone out, because it's trapping them to the upside, and then boom, okay, with one candle is stopping them out, and we want to take that next available candle. All right, it's best for these setups to be pretty much right at the key level. Okay, you don't really want it too far from the key level. It could be, right at that key level, these engulf traps. Okay, and let me show you another example. Okay, so this is a regular engulf. Okay, again, I like these ones with the long tail. Okay, long tail right here, came back up. Okay, I like this one because we couldn't close right here, right? But I like this with the long tail, all right? And basically it shot back up. Okay, so that's number 7, guys. Let's go to the 8 setup. Okay, so the 8th setup is basically a limit setup. We're looking for, again, the first pullback. So notice how we had the market going up, okay, and someone went short right here, okay? But notice how it couldn't close below here, okay? This candle, these candles, it was red. Notice how it went below this candle. It was red before, but it couldn't close below this candle, okay? This candle, same thing. It was red, but it couldn't close below this candle, okay? This is a trap. So whoever went short right here, okay, they're about to get trapped. But notice how we had a nice demand out of that level. As soon as price comes back to this level right here, I'm just basically going to go with a limit order, okay? So when I see something like that, okay, I'm going to go with a limit order right away. Now let's say that this bar right here was an engulf bar. So let's say that it went over here, okay, went all the way back down and shot up. So this bar right here was just an engulf bar and shot up, gave us a demand. I would do the same thing, okay? The whole setup is pretty much somebody going short, getting trapped, smart money's trapping them, okay? Notice how it can't even close below this candle right here. That's telling us that it's very strong, okay? We don't need the price to actually try it, 2 times. I'm just showing you right now that it tried twice to actually close below this candle. We just need it 1 time, okay? And basically make a nice little push up, smart money push. As soon as it comes to this level right here, whew, I'm gonna go with a limit. And I actually took this trade right here. This was a nice 4-to-1 for me, okay? So that's the number 8. That's a bonus trade. You don't have to know that right away. Now, this is not the only one you can actually do a limit on, okay? Most of these setups, pretty much all these setups, you can do a limit on. the ones that are stop outs. So the ones that are stop outs, when smart money stops someone out, those ones you can actually do a limit on. Okay, like I said, I like to look at when I do a limit, I like to look for the first pullback. Okay, and I also want to go to the deep level. Okay, so I'm always looking to get in. Okay, where the candle that started the whole move. Okay, I'm not looking to get in at the swing high. Okay, I'm looking to get in always at that deep level, because it gives you that nice risk to reward. Okay, and also it gives you a decent stop loss, because if you a lot of times you put it at the swing high or a swing low, you're dealing with a bigger stop loss. So I like to go deeper. Okay, now I know some of you guys are going to say, hey, what if it doesn't touch this and then hits a swing high and then shoot up? Well, I'm just not going to get in the limit. I'll probably get on a stop order. So let's say that it hit this swing high right here, gave me a nice stop out setup. Okay, I'll go long right here. Okay, with a buy stop. But overall, I first, if I'm looking for a limit order, I'll go for that limit order first. If I can't get it, I go for that stop order, buy stop. Okay. Now let me show you guys another example. Okay, so let's look at here. Actually, let's look at this one first. Basically, we have the market giving us a nice smart money push. It didn't come back to this level, which is the original level, but it came back to the next available level. Gave us a nice, you notice someone got stopped out. Okay, and notice how it can't close. Those are the ones I love. Okay, ones that can't close. A lot of times it will come back to this. You can throw a limit on it. Okay, now the only reason why I would probably hesitate to throw a limit on this one is because this one wasn't really the first pullback. Okay, this pretty much right here was the first pullback. So anytime I see a first pullback, that's the one I want to get in. But for the most part, this wasn't a first pullback, but it still worked. Okay, these are very powerful. Especially when you see when the market can't close, someone got stopped out, and it does a smart money push. Okay, notice how it did a nice smart money push, created a nice demand level. Okay, came back to it. This is a nice limit order. Okay, now if you don't want to, this one right here, I probably would just wait for a just a regular stop out, and notice that we did have one. Okay, so notice how price came to this level right here. Okay, so price came back to this demand level right here. Someone went long right here, got stopped out. I'm buying this bar right here, looking for a nice 2-to-1, right? So that's how I'm looking at the market. Let me show you guys another example of a stop out. Basically, I actually took this trade right here. Like I said, you want to take that the first pullback when the market breaks out. So whenever the market breaks out, right, when the market breaks out, you want to take that first pullback. Those are the best pullbacks right there. Now notice how someone got stopped out right here, right? Someone got stopped out. They went short, they got stopped out right here. And then we had a nice push to the downside. Okay, I went with a limit order, and so it came back to the last candle. Remember, we're doing the last candle. So the last candle, I went with a limit order and basically look for my profits. Let me show you guys another example real quick. Here's another example. We have a first breakout. Now remember, we only need 2 candles for a nice little UB zone. Sometimes I call it UB zones, unusual behavior. Or you could call it supply and demand zone. Okay, we have a nice little basically stop out right here. Smart money stop these guys out right here. Can't close above this too. Nice little momentum candle right here. Okay, that's, like I said, that's all we need, guys. 2 candles, right? Nice little momentum candle right here. It came back to the supply area and dropped. Now again, guys, we're looking for smart money to stop someone out. Looking for the market to break out, right? Create a either demand or supply zone, and we're looking for that first pullback. Okay, back to that breakout, right? So we want that first pullback. We want the market to break out first, and then we want to catch that first pullback, right? And not only that, we're looking for the one candle that started the whole move. So we want that deep discount, okay? And we're looking to get in the market, right? Okay, so that is all the setups, guys. Basically, these setups, it might seem a lot, but it's not a lot, guys. Trust me, it's not a lot. The best thing you could do is basically print out these setups and have these setups right next to you while you trade, so you can look at them. So you can have the setups right next to you and you say, okay, this is the this is a breakout, or this is whatever. Now, basically, out of all these setups, these 8 setups, you're mainly going to take only 4 setups you most likely are going to probably use almost every single day. The other setups, they don't come that often, okay, but you still need to know them. The 4 setups that you're probably going to use almost every single day when the market can't close below a high or a low, okay. The second one is when the market stop out a person at a key level, okay. The third one is basically when the market does a smart money retest, okay. It comes close to a high or a low, but it doesn't break that high or low, okay. And the fourth one is basically an engulf trap or engulf in general, okay. Those are the 4 ones you're probably gonna basically use every single day. So if you tell me that you can't remember 4 setups, then I'm not gonna say something's wrong with you, but you gotta step up your game, okay. Now the rest of the setups you're gonna have to the side. You have the pictures next to you, okay, if you can't remember them. But those 4 setups, you can basically have those next to you too. But trust me, you're gonna, once you start doing these, within 2 weeks, you're gonna remember all these setups anyway, right? So those are setups that I use every single day. I love them because, like I said, they give you a nice risk to reward. Minimum 2 to 1, 3 to 1, 4 to 1, 5 to 1. When I'm taking these trades, like for example right here, if I'm taking this trade right here, I'm always looking for the market to break a high or low, okay. So this one was a nice 4 to 1 trade, close to 4 to 1, right? As soon as it came to this level, I went with a limit trade and I basically went for the high, okay. So that was close to a 4 to 1 trade. So that's what I'm trying to tell you. Don't worry about trying to trade like a madman and have like 5, 6, 7, 8, 10 trades in one day. You don't need to, okay? One trade can literally like take care of your day, right? That's pretty much it. Every time I'm taking a trade, I'm looking for the market to break the high or low. Now, the deeper the pullback, the better your risk reward is going to be, okay? If the pullback is small, okay, you're going to probably get a 2 to 1, whatever. Now, usually, if I'm going with a stop order, meaning like I'm looking for a confirmation on a candle, I usually get maybe a 2 to 1 out of that deal, okay. Whatever the price is, whenever it reached the high, is usually a 2 to 1, sometimes 3 to 1, depending on how deep the pullback is, okay. But for the most part, minimum, if I'm doing a limit, I'm looking for a 3 to 1, okay, 4 to 1, sometimes 5, 6, 7 to 1s, okay. So if you have any questions, let me know. Okay, so this is the setup video. So now let's go to the next video.